What a weekend it's been for crypto and the markets as a whole. Absolutely massive. So much has been going on. And you can see over here from the crypto bubble charts, slowly but surely the coins are starting to wake up. I'm sure many of you have seen massive pumps across the board on relative altcoins as well as Bitcoin as well. And the reason being is a form of quantitative easing maybe just around the corner. We're going to cover all the details and more. Rate cuts may be coming soon, and there is a whole lot of changes within the market. So without further ado, let's get straight into it. And I want to start off over here with CZ of Binance. He is sometimes the villain and sometimes he is the hero. And today he looks like he is the hero. He says, given the changes in the stablecoins and banks, Binance will convert the remaining of the 1 billion industry recovery initiative funds from, and this is the keyword, from BUSD, in other words, stablecoin, to native cryptos, including Bitcoin, BNB, and ETH. Some fund movements will occur on-chain, full transparency. So there he tells us exactly what he's going to do. And that means that if you got into the market before him, you front ran him, and you're going to have a whole bunch of liquidity that's about to push your prices up from behind. If you are present, say that you're present over here. I want to see who is here. We have moved the time back. So I see Banter Girl is here. Some of you may be new watching live because we now moved the time back for daylight savings in the US. Also, do me a massive favor, give the video a like, hit the bell notification, and make sure you are subscribed to the channel because we bring a lot of alpha over here. I see Noel's here, Chaos is here, we got Simon is here, Black Sales here, Crypto King Fingers. Welcome back, guys. Welcome back, everybody. Let's get the show on the road. So with that being said, Andrew Kang says, though, the net buying effect here is likely much larger than the $1 billion, given that CZ is paving the way for tens of hundreds of thousands of project teams in the space to diversify their funds now into BTC and ETH. Just like the 2016 to 2018 cycle days, front-running flows will be multiple of stated buying. So what is he saying? Essentially, he's saying that because Binance is kind of the industry leader within the market, and a lot of people will basically follow suit and do what he does. So all these different projects which have massive treasuries may start to deploy those stablecoins as well into crypto, and that could create quite a parabolic run. Now, we're going to go over the technical levels in just a moment because there are some very important levels to clear, and we can't get too excited yet. But so far, it's looking good. It's definitely looking good with the potential for some momentum. And here you got the trending hashtags on Twitter: buy Bitcoin, JP Morgan bullish, SVB collapse, bull market, and we have HEX. We have HEX as well because maybe we're going to have the Pulse chain release that's going to be coming. Maybe that is going to hit the market. So something to keep an eye on as well, which is why HEX may be pumping at the moment. So the narrative at the moment of a new Bitcoin bull cycle is essentially this. We got the Fed commencing unofficial quantitative easing, which is going to last all the way until March of 2024. And that's right in line with the halving, right? So you have pretty much a whole year of potential QE. Bitcoin halving is then 420 days away, and you know how that goes. I've shown you guys. Look at my Twitter. Go to the pinned tweet in my Twitter. I'll actually show it to you now. But essentially, we're working on that timing cycle over there, and then major institutions and retail traders have already capitulated. And I can definitely testify of that myself. I've seen a lot of people who've reached out to me, especially over the course of the weekend with the depegging of USDC, where they basically capitulated. They withdrew all their funds, not only from stablecoins, but literally straight back into fiat. And what's so scary and interesting about that is now you have a complete close down of fiat on-ramps and off-ramps. And it's debatable whether this is going to be bullish or bearish. Obviously, if you look at it at face value, it looks like something incredibly bearish, but I'm going to show you in a moment why this could actually be something bullish. So he says that these bailouts prove that banks are not efficient self-custodies of funds. And then he says you also have Hong Kong over here as a crypto hub. China's easing, and then you have a generational shift from boomers to zoomers. So that's kind of what's going on over here. And TED Talks also shows you the unofficial quantitative easing begins on Monday. This is so bullish. I just pulled this tweet up right now. It literally just dropped, so I haven't even read it. So let's go through it together. He says here, borrower eligibility. Any US federally insured depository institution, including a bank, savings association, or credit union, or US branch or agency of a foreign bank that is eligible for primary credit, is eligible to borrow under the program. So basically that opens up a massive amount of people or banks that could essentially claim if they are underwater over here or they basically wreck. Collateral valuation. The collateral valuation will be par value. Margin will be 100% of par value. Fees, there are no fees associated with the program. And program duration, there you have it, until March the 11th of 2024. So this is essentially the document that states that this many form of quantitative easing is coming into play, and it's going to be in effect until March of 2024. And from a timing cycle perspective, I said I would take you there. That's actually all that you need. All you need is for at least a little bit of momentum leading into the halving. So here is the thread, which I wrote all the way back on November 25th of 2022. I said why I, a renowned bear, believe that we are approaching maximum opportunity and how I plan on buying at or near the bottom, all whilst practicing solid risk management. Go through, have a read through that. But essentially, now you have a form of quantitative easing leading into that halving event. And you know, historically, if you look at the halving cycles, pretty much almost every time, here we have it, price tends to rally. So here you have 1 year before the halving, that marks the orange line. Price begins to start to bottom over there, and it slowly, gradually moves sideways and slowly upwards, getting into the green line, which is the halving. That is when the rally begins. So that was from the previous cycle in 2013. Here's 2015. Halving in 2016, price rallies. Let's look at the next one over here. Here you have 2020. Halving happened in May of 2020, price rallies. And pretty much the rest is history, right? That's where we are at the moment. So go through, familiarize yourself with that thread. I've been sticking with that plan ever since I wrote that. And so far it is paying dividends. All right. Important events that are coming up. Of course, we have huge things this week. We have a Fed announcement, which is coming up today. That's going to be at 12:20 my time. Make sure that you change your clock over there according to your time if you are using the Forex Factory calendar over here. Then tomorrow is the big day, because we have the CPI month on month as well as year on year. And then the core CPI, that is definitely going to be a market driving event. And then coming up on Wednesday, we have a couple of other things. We have core PPI, core retail sales, Empire State Manufacturing Index, PPI again on the month and month, and then retail sales. So, and then on Thursday, we have unemployment change and unemployment rate. These are things that you want to keep your eye on. And then for Europe, we have ECB press conference as well on Thursday. So big week once again. Let me know in the comments, what do you think is going to happen? Do you think that this is going to result in bullish continuation, or is this a mega trap? I need to know your guys' thoughts. I value your opinions as well. Let me know in the comments. I know you're a very smart and together audience. So let me know what you're seeing within the market. What is going on over here with the Fed funds target? Well, essentially, they now, for the very first time, pricing in with 2.6% over here that there will not even be a rate hike coming up this week. They're basically saying that no rate hike, 2.6% probability of that, meaning that you can consider that a complete pause or pivot within the market. And this is what happens, right? The Fed continue to raise interest rates until such time as they essentially break something. And it looks like we are breaking something with the banks at the moment, crashing and coming down. You have now a 97.4% probability that the rate hike will only be 25%. And for those of you who have been following the show on the regular, you will know that this has been flip-flopping between 50 and 70, between 25 basis point and 50 basis point rate hike. Remember, we don't want higher for longer. If you're looking for a more bullish market and you want liquidity to re-enter into the market, you're looking for this to basically be priced in at lower rate hikes and slowly to start to shift and pivot. It's arguably, it's at least arguable in the long run. What that means is they're going to be kicking the can down the road. Very possibly it is. But this is why we are in crypto, right? We're looking at hard assets like Bitcoin. So it doesn't actually matter to us as much. We just want Bitcoin to be accumulating and continuing to the upside. And then we will be holding those positions. And if it's not, of course, then we hold cash until such time as the market turns again. So here we have the banks. We have a big problem over here. They call it Operation chokehold, right? So basically, where they're basically choking the crypto market, closing the fiat on ramps and off ramps. And here you have Silvergate, which is pretty much on its way to zero. Massive fail over here by Silvergate, one of the big crypto banks. Then you have the other one, Signature Bank. Signature Bank has now officially also gone down over the course of the weekend. So definitely not looking good over here. They're going to need to be bailed out as well. And then we do have the Silicon Valley Bank, which is the next one related to the tech sector, right? So because crypto is so heavily correlated to tech, to at least the tech stocks, if the tech stocks go down, that's going to, of course, affect crypto as well. It has an influence on crypto. If these banks get bailed out and tech companies start to rally, then essentially that gives crypto the license as well to rally due to the simple correlation that they have. So let's look at this tweet over here from Nick before we get into the chart. He says, essentially, Goldman Sachs, in light of recent stress in the banking system, we no longer expect the FOMC to deliver a rate hike at its March 22 meeting, with considerable uncertainty about the path beyond March. JP Morgan, they basically said, if they indeed have used the right tools to address financial contagion risks, time will then tell. Then they can also use the right tools to continue to address inflation risks, higher interest rates. So we continue to look for a 25 basis point hike at next week's meeting. So that's kind of what's going on over there, all in line with what we're seeing. And then you have here from Kevin Svensson, essentially this is what we're potentially looking at. Powell may hit the money printer once again. And then you have 25 with many zeros over there. What is this? $25 billion will be made available by the Treasury to fully protect all depositors. I wanted to also mention, well, if you have the fiat on-ramp, off-ramps, which have basically been shut off, so I said to you that at obviously face value, that seems like an incredibly bearish thing for crypto. But if you look at places like Nigeria at the Bitcoin price over there, they were paying, if I'm not mistaken, correct me if I'm wrong in the comments, but if I'm not mistaken, they were paying in the region of up to a 40% premium above the actual Bitcoin price, the spot price, because it's so difficult to get their hands on, right? So that might be what you'll see, is start to see a massive demand for peer-to-peer transactions within crypto. And then you're going to have sites like localbitcoins.com that are going to start to come back into effect if the exchanges aren't able to on-ramp or off-ramp crypto. And then another way for the bigger players is going to be Grayscale. So if they can't get their hands onto spot Bitcoin, they would now be incentivized to buy Grayscale, because firstly, Grayscale is still at a discount, and it may be the only way that they can buy it through the stock market, essentially. And here you can see that the discount is slowly closing in. It's starting to move, actually not slowly anymore, it's starting to move aggressively towards the upside over here. And you know the saying, the trend is your friend until the end of that trend. So we've mentioned this before, that bull market is unlikely to happen until such point as that discount closes. There's music. Do you guys hear music? I don't hear music. And now, still hear music? Josh, I think that, bro, you partied too hard this weekend. There's still music ringing in your ears from the clubs or what? Okay, I don't hear any music. Background music is fighting. I've turned all the sounds down. Let's turn this one. Let's turn this one down. All good? Is the music gone? Okay, cool. I think you guys had a rough weekend there. Okay, let's continue. So moving on over there, but there is always consequences, right? We spoke of kicking the can down the road, and CZ says it really well over here. He's on form. CZ is definitely on form this weekend. He says, once you do one bailout, you end up in a dilemma. If you don't bail out this time, why not? You were supposed to protect consumers by diluting all of your citizens. If you do bailouts, then banks have zero incentive to manage their risk. It would be stupid not to take max risk for max returns and split the rewards as soon as you get them. When you fail, you get a bailout. It's like a free ride, right? He says bailouts encourage taking bigger risks, which require more bailouts. Tricky problem. Maybe, just thinking aloud, maybe just bail out the consumers, make them whole, then shut down the failed businesses and claw back some executive pay. This gets a bit messy. So what do you guys think? I mean, I agree with him 100%. This is what happens, right? You know that you have a lifeline, so you're going to take on max risk until such time as something breaks. And then who cares, right? You've sold off some of your stock anticipating that that the system is going to collapse. This is at least the executives. We have evidence of that they were selling off stocks within those banks. And ultimately, the Fed's going to come back and pick up the pieces for you and make you whole again. So it's quite a messed up situation. But I guess this is the way the financial markets work. It is what it is. All right. ES, so S&P 500 futures over here, essentially stuck within a range. You can see at the top of here, 41.80 is the range high, and then you have this 37.88 at the range low. Let's kind of see where the mid-range is over here. Quickly switch this out. There we go. All right, mid-range. So we're coming into mid-range on the S&P 500. This will be a key level. This region over here, coming in at 39.85 and 50 cents. Today will be very, very important with regards to whatever goes on with the Fed, whatever announcements they make, whatever the stock market does. If the stock market has a massive, massive push to the upside, which you can see, this is the futures chart, right? Futures already open. Look at that big, big move already to the upside for the stock market. That's huge, 1.84%. If it can close at 2.6% from the lows, pretty much above that mid-range and hold there, that could potentially start to shift the trend back up, or at least target towards the range high once again. So I'll be watching that carefully. We have the dollar, which keeps falling back below this key level at 104.8, but it is coming into a key yearly level, so could potentially bounce over here, which is something definitely to watch today. I think that ultimately whatever the stock market does will affect everything else. So interesting times. But Bitcoin is still looking good. You have a big, big, strong bounce off of that 7 moving average on the monthly chart. You have the stochastic RSI, which is crossing on up and gaining strength and momentum with each passing day. You have the RSI as well over here, which is going to soon regain the yellow moving average. That is one thing that you want to see. And then the next is you have the MACD. The histogram is continuing to slow down and move towards the green side. Once you have this cross over here between the EMAs, that would be a final bullish confirmation for the high time frame traders. This is for the investors, the people that are holding for the long run. At that point, once that MACD crosses up, you're probably already at this 20 MA, which is currently coming in at $32,000. That is major resistance. Keep that in mind. That is huge resistance, and we'll need the momentum to break through that at a later stage. So Friday stream, I outlined this exact scenario. I said this is what we're looking for, right? We're looking for a swing failure pattern, swing failure towards the downside, spring reaction off of that. We got that exact wick. We reclaim support. I told you, if this happens and you close above the support, as well as you didn't even have to close that high above support. All you needed to do was close back above the yellow 21 exponential moving average on the weekly chart. If you closed above that, that was a sign that there was going to probably be bullish continuation. And then we're looking for a sweep of all this liquidity. So we have liquidity 1, 2, 3. I'm looking for a deviation. That is essentially the range high. And remember, the same way that we had a deviation on the bottom of the range over here, I'm looking for a potential deviation outside of that range. Now, this may only happen in April. So for the rest of March, if price can pretty much just grind sideways and slowly up, then this is still very much in play. You have the potential to basically target towards that 28, 29K level, which also happens to be the underside resistance from this entire zone over here. So that's what we're watching. That would still be a bearish retest. We reevaluate when we get back to that phase to see if there is going to be a deeper pullback from that zone. But so far, it's looking good. You have a beautiful, beautiful reversal candle coming from very key levels. Look at that. It went straight into the lucid SAR. Did it actually touch it? Let me zoom in. It didn't touch it. I was getting quite nervous over the weekend when this was happening, because this is one of my main determining factors whether I'm going to be bullish or bearish. If this lucid SAR broke, I would have a very different opinion today. I would have a completely different outlook on the market. Okay. So we have that there. Same thing over here. Weekly bounce off the lucid SAR. Same thing. We reclaim those EMAs, right? So which are the EMAs over here? I'm using the 9 and the 18 EMA. The 9 is the white one. The 18 is the yellow. You can back test this. I've shown you it before, but any time that you have this cross towards the upside, the golden cross, essentially, it's bullish. As long as it can hold above and they don't cross back down, it's going to hold you in those positions for weeks to months, and you're looking for long trades, right? So let's have a look at one example of when it crossed to the downside, just as an example over here. So you had the death cross. That basically told you exit the market. Came down, bounced back over the top. So now we have the inverse situation of this, right? Bounced over the top, but you can see those EMAs never crossed back up again. And it held you out of that position all the way down until where we currently are. So what do I mean by the inverse situation? Well, price obviously came below those EMAs, but obviously no cross. We've reclaimed them. You now have a very, very strong area of invalidation. If you are long, it's of course going to be below this wick. You don't want to see any prices come back below this wick over here. If they do, that's going to be a massive bull trap, and we can get out of our positions and look for lower prices. My expectation would now be, if everything goes well with the Fed over here, we're going to be looking for prices to potentially push back into the Gaussian channel. Once you reclaim this Gaussian channel, then you can start to target towards the middle part of the Gaussian channel, the middle band. Where's the middle band? Right now, the middle band is 28,856. Okay, Swanee says, what did Swanee say? What is my current positions? I'll show you my positions. I have a few positions on. As I mentioned over the course of the weekend, let's grab this over here and I'll show you. Actually, the next tab was to show you my positions. So what happened over the course of the weekend, to me at least? Let's go over here. Okay, there we go. That's what happened. Sold all of my USDC for Bitcoin. I took a 4.5% loss on big positions of USDC. I put all of that straight into Bitcoin. I'm holding huge amounts of spot Bitcoin. I'm up massively. I'm pretty chuffed. I'm happy. I'm glad to be in the position that I don't need to now start looking for new entries. I have a clear invalidation. I'm pretty much going to be holding my spot Bitcoin. What other positions do I have? Well, I'm obviously running my dollar cost averaging over here. So here we have the dollar cost averaging bots. This is on OKX. They are still currently down, but this is a long-term plan. I'm buying every single day, looking to capitalize on what I thought would be a major, major dip within the market, which is currently what we've seen. I will reevaluate if we get the deviation above the range high. So we get to 27, 28K. I'll see kind of where these positions are at and consider closing some of them out if need be. I need to reevaluate, right? I'm a trader. I reevaluate week to week and see what's going on basically each and every single day. Next positions that I have, I took a leverage position to, I have Bitcoin over here. I'm up 65%. Nice position. 5x leverage. I took a mask position up 116%. Those are leverage trades. By the way, you want the leverage trades. Guys, I mean, I can't tell you what you're missing out on over here. Let me quickly pull it up. I have a team of absolute expert traders which help me out with both my shows as well as the Discord over here. And they drop insane alpha. Insane alpha. Do you want to see some of the results over here? Here's some of the results. These trades are free for you guys to take. We guide you. We hold your hand every step of the way. This is not financial advice. We are not financial advisors. You take this at your own risk, but we give you every single trade and step along the way. All you need to do, if you do want to get access to that, is go onto YouTube. Okay, go to the show. Here's the show. Great. Click on show more. Then sign up to Bybit, sign up to OKX, or sign up to BitGet. Any one of those exchanges, you get sign-up bonuses as well. You're getting up to $30,000 on Bybit. You're getting up to $8,000 on BitGet and $10,000 in mystery box rewards on OKX. OKX also has the bots, right? And they also did introduce, by the way, up to 30x leverage if you do want to leverage trade the USDT pairs against each other. You can do that. Once you've signed up to this, then our Discord manager will verify you. You need to go to Discord over here, click on the Discord hub, get into the VIP. That is a VIP hub. And to get into that VIP hub, you have to be verified. And that way you can get these trades. So make sure you go through and do that right now. All right, total three. still within a range, still within a downtrend. You do have to be careful. We need some work to be done here from the bulls in order to change this trend, right? First and foremost, we need to break above the range high. Breaking above the range high and holding like that would not only get you out of the range, but it would also create, for the very first time, a higher high, because it's just been lower high, lower high, lower high. Once you get the higher high, if that does come into play, you're looking to capitalize on the next higher low for big positions over there. That's where you can time your entries into altcoins should you wish to get into the altcoin market. Otherwise, for the time being, you have to call a spade a spade. The total 3, which represents the altcoins, is essentially bearish. It's in a downtrend, and ultimately you're looking to trade it from the range high, or at least the top of the range, back down to the range low. And if it breaks below that, that downtrend continues, and you could potentially go as low as 179 billion. But obviously, in light of the new information that we have with regards to the market, hopefully that's not going to happen. All right, next, we have the Ichimoku cloud. Look at that absolutely beautiful candle that came directly into the green cloud once you had the cross. And this is like moving averages and exponential moving averages. Once you have these crosses from bearish to bullish, or from bullish to bearish, either way, when they cross, often price pulls back into those crosses like a magnet. You can see that cross over here. Now it's reclaiming these EMAs over here. As long as you can see closes anywhere around here or higher, that would be incredibly bullish. It means that most likely going to see continuation in the days or weeks to come. All right, we're not out of the woods yet, though, guys. I have to be clear on that. We're not out of the woods yet. This is still just a relief rally, a bear market relief rally until proven otherwise. So I want to be crystal clear on that. It does still present amazing swing trading opportunities. Here you have the ADX and the DI negative and positive. You have the green one, which is the DI positive, currently about to cross above the red. You can see them converging into one another. What you'd want to see if you're a bull is you want to see this get above. You want to see it get above the EMA as well, and then that EMA to slowly curl up and basically just track on upwards, creating momentum, showing that the bulls have strength. So currently, according to this indicator or signal, we're right now at a decision point. We're at a pivotal point, and the market will soon choose whether it's going to be a bullish or bearish move. It's not decided yet. Renko has been a great indicator. It hasn't fully flipped green yet. It got you out of your position over here. Once it started to flip red, it took you out of the position, and now it is looking like it's starting to flip green. But you can see the color of the green is transparent in relation to these. You need to, if you're trading Renko, I don't trade it. I just look at it out of interest sake to show you guys. A simple trading tool. You don't need anything else on the chart, simply just the Renko candlesticks. Once you have a full green print like that, that would be your signal that you can enter the market. It's not closed yet. You have to wait for the close. All right. Liquidity. Bone dry. No liquidity. There is no liquidity. Let's see what happens, though, with the US liquidity later on today. If this mini form of quantitative easing is indeed true, possibly you can break this trend line on the liquidity chart and liquidity can re-enter into the market. But for the time being, keep in mind, without liquidity, it's very difficult for the market to rally, and it's just an echo chamber, an echo rally. Okay, I gave this chart as well a couple of days ago. Last week, I showed you that anytime that you see the Fisher distance from the EMA come into these low levels, -2 to -3, we got down as far as -4. -4 is a strong buy for me, usually, assuming that price action trading comes number one. Oscillators and indicators are second. So if the oscillator is at -4 and price action is coming into a key level, which it was, strong buy signal. So that's why I got into the market, I made my buy, and price is rallying. So we're looking for this to continue on up, potentially get back into the higher areas around that +3, +4 level. So watching that over there. Next, Bitcoin on the range chart over here. You can see we had a strong daily close above the mid-range. That's a good sign. As long as we don't come back and close below that mid-range, I would say that risk is towards the upside for the next couple of days. You're looking for potentially a move all the way up back towards the range high. Once we get here, I'll keep you guys up to date. We'll reevaluate. We'll see what to do next. Are we going to be looking at a deviation or just another perfect clean rejection like this? I've told you before, Bitcoin usually doesn't trade as clean as this. I didn't expect that this would reject here. This one, fair enough. This one over here, I was thinking it's going to at least deviate and screw over some of the early shorts, but it didn't. But what that means is over here, you have a whole lot of liquidity, right? Liquidity. That liquidity could potentially be taken. There's a whole lot that's up there. And then slowly but surely, we're going to be building up liquidity at these lower levels. So you want to keep that in mind as well. But I think the stronger liquidity is at the top side at the moment. I'm not going to go through all the altcoins just for the sake of time. But for the most part, they look pretty much like Ethereum targeting. Oh, let me just go back. What did I do? How did I get out of that? Oh, no. Have I broken it? I think I broke it. Okay, there, I fixed it. Okay, let's look at some of these very quickly. So here you can see coming towards its range high. That's Ethereum. Ethereum has run harder than Bitcoin. Here you have Optimism reclaiming the range high. Atom was a nice one. I put in the daily candle newsletter as well. You can see over here, lows, higher low, looking at a higher low. This was a high confluence trade. If it did get that far down, it obviously didn't. Maybe it still could, but we're not there yet. Otherwise, if this is a higher low, you're looking at a target back towards the top over there. Let's look at near. Okay, near, straight off the range low. Pretty much you could still take this trade right now. Obviously, calculate your risk. You're looking at, that's a 15% move. You don't want to go all in. If you put your whole account in there and you get stopped out, it means you just lost 15% of your account, right? Calculate your risk. Whatever you're allowed to lose, that would be your stop under there. Target is going to be towards the mid-range and then potentially towards the range high. Let's see, 𝗬𝗃 was another one that looked good. There you go. 𝗬𝗃, deviation, question mark, is this another deviation? If this is another deviation and you can start to reclaim the range low, then again, you're targeting up to about $13. And then if things get really heated, potentially all the way up to 18. I'll drop these in the Discord, assuming you guys are all joining the Discord today anyways. I'll drop it in the Discord for you, the rest of the list. Okay, important. Why did I take the trade that I took? Well, one of the main reasons was this. Pretty much this is the bull's final line in the sand. And I've been screaming about this for a long time. The dark blue line over here, right? Any closes underneath that, you're out. Basically, that's it. Bears take back full control. Above this, bulls have control. What I like over here is they not only bounce off of the 200-day moving average, beautiful technical support and technical trade over here to bounce off of that. But they also reclaimed and held above the 200 exponential moving average. So as long as we're holding above this, any pullbacks into that region could potentially be areas where you could re-add to your position or re-add to your longs at 21,759. So far, it's looking good. There is, of course, still lower highs, which I'm going to show you in another chart in a moment. But another thing is you have the potential for a short squeeze now, right? Yes, we're at resistance. Look at this, touch point over here. Currently struggling to get above there. But look at the funding rates. This is the FTX collapse over here, which was max negative funding, max shorting within the market. This, you had more reason to go this heavy in your shorts than what you do here because you have a new swing low, right? It makes sense to short when there's swing lows. Swing low, you want to short. Not that many shorts over there, right? Over here, not really a swing low yet because obviously you're holding above those prices over here. What happens over here? Swing low. That gives big reason to short. Now look how aggressive and heavy the shorts are, but you're bouncing off of that 200 MA, key technical level. A lot of shorts over here. That means that creates the opportunity to create a short squeeze. If you start to push a little bit higher, these shorts are going to be forced to close their positions. When they close their positions, what happens when you close the short position? Essentially, you're buying back into the market. What does that do to price? Of course, it creates a squeeze, right? So be careful of that. There is, if you are shorting, be careful of that. There's a potential of a major short squeeze. And you can see over here from Chimp, breaking news, longs are now being paid as much as 0.6% a day to long Bitcoin, one of the most negative funding rates observed in modern times. He's very dramatic here, in modern times. But yes, the funding rates are negative. And if you are holding longs right now, you're getting paid to be long, which is quite interesting. It means you can compound your gains. Okay, funding on Bitcoin coin margin contracts is still going absolutely berserk. Look at that. There you go. Using the heat maps as well. Negative funding, completely negative funding, negative 20, biggest that we've seen in a very, very long time. Okay, daily chart. Bull moon back to the rescue. I know it tested you guys for a few days. We had the bull moon that printed on the 8th of March. Then we followed 2 days of red after that. And here's the bull moon. Back by popular demand. Price is rallying. We've reclaimed important levels. Let's quickly take off the moon so it doesn't confuse you. There you go. We reclaim this level over here. We're reclaiming all the important EMAs. Again, a close here or higher would be incredibly bullish because once again, you're above all those different EMAs, which is absolutely fantastic. Let's see what chart have I got here. Okay, this one over here, main one is your ranges. Your ranges reclaim the mid-range. You broke the diagonal. You're targeting towards the 0.75. Let's see how price reacts over there. You could set in a lower high. If it was going to happen, I think this is the place it happens at. 23,477 because you got lower high. That would be a low high. Get above that, and then I say there's a very, very high probability you're on your way back to the range highs at 25,275. So this is what the chart looks like. I'm on the 4-hour chart over here. You can see strong resistance, right? Just where I showed you around that 0.75 level. 0.75, that means 75% of the way through the range. Let's look at it again over here. Lower high, question mark. Will this be a lower high? Let me know in the comments. Will this be a lower high, or do you think that everything that's going on fundamentally, news-wise, stock market, it's going to have the ability to squeeze shorts through this? I'm not so sure yet. And again, if you do see the squeeze through this, pay attention to closing candles, because if you get a massive squeeze through here, all the way up, but the candle closes back down here, that's still pretty bearish. Then I'd be looking to close out my positions. So this is resistance. You've got the key monthly open, lower high, lower lows all the way throughout. You got some important levels to clear. Really, you need to close above that monthly, the key monthly level, which is currently coming in at, or the monthly open, 23,149. Close above that, and I'd say you'll probably make a higher high, and then maybe we can target towards range high. Let's look at the open interest chart over here. Looking at what's happening with the open interest as well as the cumulative volume delta on both the futures traders and the spot. You can see spot is slowly starting to tick up, very, very slowly, but overall it's still majorly in a downtrend. Then futures over here, more aggressive, move to the upside. You'll want to track this in line with price action. If there's deviations from price action, so or divergences, I should say, not deviations, divergences. What I mean, price action is going up, but these are going down, then that's obviously a warning signal, especially if you see low volume within the market. As price is moving up towards where new highs would be, you want to see volume pick up, and you want to see the aggregate CVD spot and the futures continue to the upside with that. So keep that in mind with regards to your trading. All right, guys, I think that brings us to the end. Please give the video a like, hit the bell notification, and subscribe to the channel. I see here it says, where do you think Bitcoin is going next? I'm going to click. Reluctantly, I'm going to go with 25K. I don't like these price prediction things, but let's see. What did you guys vote? 58% on 25K. Make sure that you vote over there. I want to see where you guys think price is going next. Hit the bell notification so you can be notified anytime we go live. And make sure you are subscribed to the channel. That is it from me. You're all a bunch of legends. And I hope that you made some money this weekend. If you didn't, don't worry. There's going to be plenty of opportunity. And I have very, very exciting things coming up for you guys soon. I can't spill the beans yet, but you'll be pleased to be in the Discord when I announce what's coming next. Cheers for now.